Yeah, good morning, everyone. Just a quick one. I just want to explain about liquidity, types of liquidity, forms of liquidity, where this liquidity resides, and how to incorporate this liquidity for more profitability. Because without profitability, it is poorly nothing. Now, what is this liquidity that we are talking about? Before a market is trending, maybe one market is trending upside, one market is buying. It's not spirit that is pushing those markets. It's individual, corporate bodies, hedge fund, and all those things. And all these movements are based on buying position that people are accumulating that is pushing this market upside. The same thing applies to downside movement. So without liquidity, market is stagnant. Without market participants opening those orders, market will be ranging sideways. So now, what is this liquidity that we are talking now? Let's look at this. Let me explain by this. Now, this is market made a low here, boom, made a high, made a low, made a high. Now, let's take this to be a higher time frame, a monthly higher time frame, which is one of the major liquidities we will talk about. Now, before this market will trade from here, this area to this area as a sell, there must be a sellers from here. Opening position. Sellers will be opening position from here to here. Their position got exhausted. Now, buyers will now start from here to do what? Engage from here. Buyers will now engage from this area and do what? Start to sell and take out all these sellers that engage from this area. Price will take out all these sellers that engage from this area and do what? And push price up to this area. Another sellers will engage from this area and do what? Push price down to this area and do what? Activate more orders of buying and give another opportunity for more buyers to do what? To buy from this area, respecting these initial buyers. Remember, the whole buyers does not enter here. Most people will enter here, most people will enter here, most people will enter here, most people, as the case may be. So we'll explain it when we come to minor liquidities. So now, another opportunity has been given to buyers to do what? To buy from here to this region, taking out all these sellers from here in this higher time frame perspective. So this is just liquidity. You understand? So without liquidity, without more buyers entering here to push price up, price will continue to come down. Without more sellers entering here to push price to this area, price will be stagnant there. So without liquidity, price will not move an inch. You understand? So there's no too much explanation about liquidity. Liquidity is what pushes price up or down or sideways, as the case may be. People pumping money, individuals, corporate bodies, retail traders, institutions, banks pumping money, either to buy or to sell in a particular price. You see? So now let's also take an instance of a sell. It says the same thing happens to a sell. For this price to sell from this area to this down area, there must be a majority of sellers that have outpaced the majority of buyers. Individual institution, as the case may be, have pile up position from here to push price down to this area. without them pushing price down to this area, price will still remain there. They push price down to this area. Before now, another majority of buyers now bought price to this particular area without taking out the initial area that the seller started selling from. You see? Now, as price reached there, it gave the sellers another opportunity to do what? To push price down to this area. You see? So when price reached this area, sellers also did what? Push price up without triggering this buy side. The same thing when it reaches here, price also, sellers also did what? Pushes price down to this area. You see? So now, when you talk about liquidity as this case study now, where do all those liquidities reside in this higher time frame? Now, this is a monthly time frame. Now, this is a buy side liquidity because this is the origin of that move. This is a buy side liquidity. This is a buy side liquidity. In this is a buy side liquidity. This is a buy side liquidity. All this area I drew out this in are liquidities, major liquidities on the higher time frame. This is where it comes to types of liquidities. We have major liquidities and minor liquidities. Major liquidities are the liquidities that reside on the higher time frame, be it yearly, be it century, be it decade, be it monthly, weekly, daily. These are the major liquidities. They are the major moves. Whenever price clear this move, we are preparing for a major dump. So now, these are the major liquidities residing on these monthly highs. These are the monthly swing points. This is a swing point. This is a swing point. This is a swing point. So these are the major liquidities. Major liquidities. These are the area that the sale started from. Now, what about the sell side liquidities? These are the sell side liquidities. These are the sell side liquidities. Understand? Liquidity is money. So for price to come from this area, it is going for another area to hunt because liquidity pairing theory states that when a price is buying, it is going towards clear sell side liquidity. First, if it clears sell side liquidity, it will grab sell side liquidity before going on. Now, when price wants to sell, price will do what? Clear this buy side liquidity. Price will clear this area. When price clear this area, this is a liquidity. There are a lot of sell orders here. So price will come from here and do what? There's a lot of buy orders here, I beg your pardon. So price will come from here and do what? And clear this buy side liquidity. Grab it and make a new liquidity, a new structural swing point, and go up and do what? Mitigate one or two internal liquidity and do what? And still push down to do what? Grab these sell side liquidities. Price is going from point to point, grabbing liquidities. For price to buy, price needs to grab sell side liquidities. For price to sell, price needs to grab buy side liquidities. So this is a selling market. For price to continue selling down, price is doing what? Grabbing this buy side liquidity. This is a buy side. This is a buy side. This is a buy side. There's not too much explanation about it. You see? So this is a types of liquidity, major liquidities and minor liquidities. A major liquidity is a liquidity that resides on a major time frame, higher time frame, monthly, yearly, decade, century, as the case may be, all those major time frame in which price, whenever price clears them, boom. You see that we are going, when this is a partial liquidity, whenever price clear this area, whenever price clear this guy, boom, you see that we are preparing to do what? Come down. Whenever price clear this area, see that we are preparing to do what? Move up. Because for price to move up, price need to clear this sell side. For price to move down, price need to clear this buy side. Just as simple as that. Now, let's move after I've explained this major liquidities of major and minor liquidity. Now, this is a major. Now, what are the minor liquidities? Inside this monthly leg, there are other movements on the lower time frame, moving like this, moving like this area. This is what is called minor liquidities. Inside this major liquidity, inside this monthly legs now, there are daily, weekly, hourly, 4-hourly movement inside this monthly leg, given all the same structure that the higher time frame is giving us. All those structural swing points on the lower time frame inside the higher time frame are called minor liquidities. The same thing that when price wants to buy, it needs to clear a minor liquidities inside that higher time frame liquidity to do what? Move up. The same thing that whenever price wants to sell, price needs to clear those sell side minor liquidities for him to do what? Move up. So this is just it. A minor liquidities are those liquidities that reside inside the major liquidities. All those minor legs that are inside daily, 4 hours, 1 hour, all those legs are minor liquidities. You see how simple this is. A major liquidities are those liquidities that reside on the higher time frame, daily, weekly, monthly, yearly. So the minor liquidities are those liquidities that reside on those daily, those weekly, those yearly time frame. You see? Now let's go to the chart. Okay, let me also explain. Where does this liquidity resides? You know, when we talk about liquidities, when we talk about buying and selling of markets, we have market sections. We have Asian sections, we have London section, we have New York section. These are sections whereby market participants buy and sell their assets, all kinds of assets, be it foreign exchange, be it oil, be it gold, be it. So inside this section, this is where this liquidity reside. Unlike now, this is where Asian section started. Asian market started there and closed here. For this market to sell down from here to here, this is where Asian participants started selling and closed here. Now, if somebody asks you, where is Asian high liquidity? This is Asian high liquidity because this is the area where Asian market started. Asian investors, Asian banks, Asian minor or anything you can call it, they started trading from here. So this is where the Asian high liquidity reside. This is where Asian low liquidity reside. So in a situation whereby price trade towards this area and clear this area, so it is regarded as price have cleared Asian high liquidity because price moves up there to do what? To target all those Asian market participants to clear all their sell order to do before doing what? Before continuing down. And in another situation whereby price clear this Asian low, it is regarded as price have cleared the Asian low liquidity to do what? Before doing what? Before continuing up. The same thing happens to London. The same thing happens to New York. There are a lot of liquidity that reside on London high and London low. There are lots of liquidity that reside on New York highs and New York low. Why? Because this is the session whereby market participants participated on the market activities, be it buying, be it selling, as the case may be. Now let us go to the charts and see how we also explain ourselves. Now this is a chart. This is a 1 hour chart, as you can see. Okay, let me start from monthly. That's where I started from this thing. Now, Now, as you can see, this is a monthly time frame. Now, this is a monthly swing point. This is a monthly swing point. This is a monthly swing point. So now this is the structure I'm talking about. This is a liquidity because this is a month. This is where this sale started from that reached there. If price ever wants to run above this high, this is a monthly liquidity, a monthly swing point. This is one of the major liquidity I was explaining. There's a lot of liquidities residing in this area. There's a lot of liquidity residing in this area. There's a lot of liquidity residing in this area. The same thing on this sell side. All these things are liquidities on a monthly time frame perspective. All these things are liquidities on a monthly time frame perspective. All these things are liquidities residing on this monthly time frame. You see? And now the minor liquidities are inside this leg. There are moves happening here. There are moves happening here. There are moves happening here. All those moves are minor moves inside this monthly leg. You see? So all this is what is considered as a minor structural liquidity inside this major monthly liquidity. Very simple. You see? So now let's go down to these minor structural liquidities inside these major liquidities. Let's go down to 1 hour. Let's use 1 hour to explain this. This is a 1 hour time. You see these swing points. All these swing points on the 1 hour, they are liquidities. All these swing points on the 1 hour, they are liquidities. They are liquidities. You see? All the structural high, structural low. Liquidities reside on the structural high, structural low. These are where liquidities reside. Structural high, structural low. Daily highs, daily low. Monthly highs, monthly low. Weekly highs, weekly low. 4-hour highs, 4-hour low. As the case may be. Now, as I was explaining where this liquidity forms, so look at this Asian high. This is where Asian market started. These Asian markets are liquidities. This is where Asian market started. This high is liquidities. This low is liquidities. This high is liquidities. This low is liquidity. The same thing on New York. The same thing on London section. These are liquidities. This is just what it is. There's no other way to explain about liquidities. Structural points, daily highs, daily lows, weekly highs, weekly lows, monthly highs, monthly lows, 1 hour structural point, 5-minute structural point, 1 second structural point. All these things are liquidity because they are the points in which market started this movement, be it buying or selling. And these are the points whereby participants participated in buying or selling. So whenever price is approaching that area, it is going to do what? Clear those sell side or those buy side before going to its direction. Now the question comes, how can we incorporate these liquidities to have a profitable trade? How can we incorporate these liquidities to have a profitable trade? First, we must engage in knowing the market what? Structure. If you don't know the market structure, the market trend, we need to know the order flow. Where is market trading? Is market trending bullish or is market trending bearish? Where is market currently is? Where is it going? Where is it coming from? If we answer all these questions, we'll be able to incorporate these liquidities to have a profitable trade. Now, let me take this example. Now, let me take this example. This is a This is a previous weekly high and also a daily high, which I also explained that liquidities reside on the daily high, on the weekly high. Now, price came and run above this weekly high. Asian market came and run above this weekly high. Now you can see that price have grabbed a buy-side liquidity. When a price grabbed a buy-side liquidity, where will it pay it to? It will pay it to a sell-side liquidity. This is what is called liquidity pairing. If you can see this area, as price grabbed this buy-side, it came and paid with this sell-side liquidity. Just as simple as that. But now, let me go back to that area. As price grabbed this buy-side liquidity on a weekly and daily level, it broke structure to the downside. This is the way we incorporate this liquidity theory for us to give us a better logic of entry. Price grabbed this weekly high liquidity. It broke structure to the downside. Now, price have given us, and this is the guy that caused the break of structure. You see how price came and respected that guy and mitigated that guy and did what? And sold down. This is justice. There is no magic about it. Price grabbed this weekly daily high, broke structure to the downside, left a POI for us to work with. A POI, a supply, no, is a demand, and left a demand, I beg your pardon, for us to do what? Sell from. So you see that price, after price broke this structure to the downside, after grabbing this sell side liquidity, buy side liquidity, price now traded inside this demand zone and did what? And sold down. Now look at this again. Look at this area. This is an Asian high. I also explained to us that a liquidity resides in Asian high and in Asian low. Look at how price traded above this Asian high, clearing the Asian market, tapping inside this guy, and did what? And sold down. Look at how price did what? Clear this Asian high liquidity and traded inside this guy. You see how important Asian market is in liquidity theory. You see, price clearing Asian high, tapping inside demand, and did what? Trading lower. There is no big explanation about this. Look at this guy. Look at Asian high liquidity. Price clear this Asian high guy and sold down. Price clear this guy and sold down. But we must incorporate this with a market structure. Where is market currently trending to? If market is bearish, we are looking for price to what? Trade above something. Is it structural point on the 1 hour, on the 15 minutes, on the 5 minutes, as the case may be? Is it on the monthly? Is it on the daily? Is it on the weekly? We need price to trade above something. Trade above something. Sorry, excuse me. Hello? Yes, Savi? Semi-white. Hi. You there like, hello? They never bring them. Say na that one come cost now. Say na 14,000. How I go take sell am? So I was interrupted. Sorry about that. So as I was explaining, before you see market trending down, market might have run above something like this, broke structure to the downside. You see how price ran above this high? This is a structural high. It could be daily, it could be weekly, it could be monthly, it could be an Asian high, it could be an Asian low, it could be a New York high or New York low, it could be a London high or London low. It could be a swing point on the 1 hour, 4 hour, 30 minutes, or the case may be. But you see how price ran above it and broke structure to the downside. You see, leaving this guy for us to work with. Now, this is our range. If we want to take trade, this is the range that we will look for to take trade. So you see how price came and respected that area and gave us what? A perfect sell for us to sell down. You see, there's no too much explanation about this. You see, as simple as that. For price to still sell up, for price to still buy, there is still the same thing. Price will still do the same thing. Clear this guy. This is a sell liquidity. Price will clear it, break structure to the upside. Clear it, break structure to the upside. And do what? And come back to that guy. That's that guy that sponsored that break of structure. And do what? And give us a perfect buy. All these are the what is still happening in this area. Look at what price did. Price took out this weekly high, daily high, broke structure to the downside, and came back to that guy that sponsored the break of structure to the downside. And do what? And fall down. Till now, we are still falling down. This is just it. There's no two ways about it. All these things are simple if you take time and study it. They are not as perfect as I'm drawing them, but it's just for you to get the idea. Just for you to get the idea. Backtest this, backtest this, backtest this. If you have any question, just don't hesitate to what ask me. This is just about liquidity. Okay? Thank you. And don't forget to like, share, and subscribe. All right? Thank you and God bless.